Hey everyone, welcome to the webinar. My name is Mark Shawson, the pattern trader. I'm trying to initiate my video cam here, but it's not for some reason. All right, well, for some reason it's not working. Welcome one and all. I give this a couple of minutes to let everybody get situated, and then we can get started. So thanks, Dwight, for putting this together. So we've got almost 100 attendees filing in right now. Just wait a little bit and then we can get started. I don't know why I cannot initiate the my video cam.
Mark, you probably want to have, is there anything else that might be using your camera, like YouTube or anything else? Any other
Uh,
streaming?
I don't think so.
All right. At the bottom left where you do start video, there's a little up arrow. Click on the little up arrow and click video settings.
It's now got the down arrow. I don't see anything. Video settings. Okay, yeah.
And just select whichever camera you usually use.
No, it is. And I'm not sure why it's not.
Is it an
What?
external camera?
Yeah.
Or just plug it out, plug it back in?
It's okay. It's just a distraction. It's fine. I don't know why it's not working.
Okay, well, if you want to get started without that, then you can go ahead.
Let me just see if it's anything else is interfering with this. I don't think so. Okay, there it is. All right, I must have done something. So welcome one and all. My name is Mark Shawson, the pattern trader. Welcome to the second day of the 4-day live trade execution webinar series. I've kind of subtitled this, How to Capitalize on Monster Moves in the Markets and Avoid Market Traps. So welcome and all, one and all. We've got over 125 people here. I'm just going to kind of quickly browse through the list here. A lot of familiar faces, a lot of new faces. Okay, great. All right, so I think we can kind of get started. I shared with you a couple of ideas yesterday, so I'm going to quickly kind of go through what I discussed yesterday, show you how I did what I do. So, I like to just show complete transparency. So yesterday I showed you at the end of the day, I was in the hole 65 grand in my stock account and kind of turned it around today. So let me just move this out of the way. One of the things I told you about was Uber. So you can see that right here, I bought 500 of the calls of the 49 series when the stock was below $47. It was like trading at about $46.80. And so, Wayne Gretzky has this, probably the most profound quote I ever read. Wayne Gretzky one time got a mouth, a mic shoved in his mouth, and the broadcaster said, Wayne, you're not the fittest guy out there. You're not the strongest guy out there. How come you're able to do all of the magic that you're able to do? How come you're able to score all of these goals? And Wayne said, I don't skate to where the puck is. I skate to where the puck is going to be. So even though Uber stock was selling off yesterday, I was looking at the price structure and I was anticipating, despite the fact that it was selling off yesterday, that it was actually, setting up for a pretty bullish move. So while the stock was selling off, I was buying and aggressively buying call options. A call option is it's a derivative. It's a very leveraged bet if you think something's going to go up. And you can see I bought 500 of these, which represents 50,000 shares. You multiply it by each option is based on 100 shares of the underlying. So 500 times 100 is 50,000 shares. So 50,000 shares would have cost me about $2 million. Instead, I put up 22 grand. But you could see that I was down about $1,300 on my bet. My average price was around 42 cents. Actually, I started buying some as low as 27 cents yesterday. And today I blew them out for $1.70. So you can see right here, it was trading at 164. I actually blew my whole position out at 170 and I made over 300% on my bet. So I put up 22 grand and I ended up making $60,000 on that position, on
Hey,
that
Mark.
single position.
Sorry, if you're doing something to your screen, we're not. If you're sharing something on your screen, we're not seeing it. We're just seeing the original first page.
So
just stop sharing and restart. It looks like Zoom is giving us some trouble today.
okay, sorry about
Happens.
that.
No problem.
Can you see my screen now?
Yep, we're seeing today's stock trade.
Okay, so let me go backwards then. Sorry about that. So yesterday, I came into, the end of the day, I shared this with you. I share you the good and the bad. I was $65,000 in the hole yesterday on my stock trades. And these were the positions I was accumulating in the stock of Uber. You can see the $49 calls that expired this Friday. The stock was trading a little less than $47 yesterday. We were kind of talking about this yesterday. I'll go to Uber, the real-time chart in a moment. I'll show you what I was doing, why I was doing. But again, I was anticipating, like Gretzky, instead of going to where the puck is, I skate to where I anticipate the puck is going to be. And by virtue of the price setup, I thought we were going to have a bullish move out of there, an uncoiling. And you can see I bought 500 of these call options. Each call option is based on the underlying of 100 shares. So it's really a 50,000 share position. And if you multiply it times the $49 that Uber is trading at, that's about a $2.5 million position. Instead, I put up $22,000. So that is the leverage. I get like 1,000 to 1 leverage, but I could lose every dime. So of this $22,000, if it didn't get to $49 plus my premium by Friday, I would have lost every single dollar. So it's really a game of chicken. I don't really, advise that you guys do this right away until you get a feeling for, what you're looking at. And you also understand your risk reward. So, I was losing about $1,300 on this position yesterday. And then today, Uber opened up about $2. And some of the positions that I was accumulating for 27 cents, I blew out at $1.70. So I made about 300% overnight, basically from the close to the opening. I made $61,000 on my $22,000, gain of 275 or almost 300%. You can see I was losing yesterday in Tesla. The thing turned around. I actually got out at a profit. Then I turned around and shorted Tesla and did a whole bunch of things today. I was actually long the calls into the Qs, the stock options, but I quickly surmised that the stocks were going to turn around. And I actually started buying puts on the industrials and the Qs, and I'll talk about that in a moment. So I started buying the Dow Jones Industrial put options when they were trading around $1. I bought 250 of them, and I'm now making $48,000 on this position. And I carried this position overnight because I think you're going to get some follow through selling, and I'll kind of explain why. And then in the FX market, I shared with you what I was doing yesterday. I came into these positions yesterday, including gold and silver. I kind of took my profits on gold and silver today. So this is what my final positions look like today. And then these were the profits that I took today. So, in the last couple of days, I've made about $400,000. And I know people, see this stuff and they just say, well, this is a demo account. So this is not a demo account. Now, I don't share the broker. I don't share with you my whole statement on purpose. I'm not registered. I'm not licensed. I'm not a money manager. I don't hold myself out as a money manager. I'm not a registered investment advisor. So I don't want any conflicts with any regulatory bodies. I'm an educator. This is my own personal trading account. And I assure you, this represents my own money. So the $2 million that I had at risk today, that is my own money. It's not I don't know if you could even get a demo account that looks like this. So this is not a demo account. So I show you this just because, I want to demonstrate that I eat my own cooking, so that while I'm an educator, I'm a trader first. Whatever I'm telling you guys, believe me, I'm doing in the markets in spades. And everything that you see is entirely based on price action. So I don't know anything about the dollar versus Canadian, price differentials, export differentials, interest rate differentials. Neither do I know between the pound and the New Zealand dollar. As you know, I don't know the balance sheet of, Tesla or anything else that I'm trading in, Uber or Tesla. I trade all of these instruments the same way, entirely based on price structure, understanding the risk reward relationship of certain setups in the markets. And I'm going to talk about some of those today. I talked about the pound New Zealand yesterday. We didn't get triggered on this trade. So I have one open position in pound New Zealand and I have one pending order. So this was the setups that initially got me into these trades. These emails go out on my daily elite service. I think we played a video for you yesterday. If you weren't on yesterday, we can, share with you how to, get the elite program if you like it. So what I try and do is show you what I'm looking at on the chart, actually set up an actual trade with a sell stop at 124.55. Dollar Canadian is trading about 120 right now. So this is about 455 pips in profit. But here's the thing. I got in this trade about 3 weeks ago. So, 3 weeks is a lifetime for FX traders. Most people are in, trade 3 hours. 3 days is a lifetime. I've been in this trade 3 weeks and I'm still not out of it. I actually lowered the take profit from 120.17 to 119.17. It's got some support in this area. I may dance out of a position, but this thing still looks weak. And here was the euro yen. I'm still long euro yen and it's making new highs today. We'll take a look at that. Here's pound New Zealand that we talked about yesterday. My trade yesterday was not triggered. My trade in silver got in here. I'm kind of advising to take profits in gold and silver. So I got in gold at 1831. Today it's got over 1870. And as you saw, I just started to take profits because I think we're at some meaningful resistance levels. And, I'm just going to, sit back and now reevaluate, see where this thing goes. So just give you an idea of what, and how I look at it. So we talked about QuantumScape yesterday. So I'll kind of just fast forward perhaps to some other trades I didn't share with you. So a couple of weeks ago, I noticed, you can't really see, it's real small on this chart, but we were in what's called an ascending broadening price pattern. And then right at the top of that, you had a key reversal. I was actually sitting on a master pattern session on the Friday before this. This went out on a Sunday. So, on the Friday before, I was kind of doing my analysis before, all of the members in a group called the Master Pattern Trader, which is part of the elite package, where every Friday I go into the markets live and, kind of look what's going on. And when I was looking at the QQQs, which are a proxy for the NASDAQ, it's an ETF that tracks the NASDAQ, I started going to my analysis and I thought, I just saw one, pattern going into the day. But when I, started peeling back and, observing in real time, I saw there wasn't one, there wasn't two, there wasn't three, there was 4 bearish price patterns. And I got so worked up, after my analysis. I guess I did such a good job of convincing myself that I threw like 100 grand into these options that expired 1 week, forward, meaning that if I was wrong, I was going to lose 100 grand. And I also, bet pretty far away from where the market was trading. So I bought these put options. The strike price was 320. Now a put is the opposite of a call. A put is a bet on the, on a decline of any particular instrument. These are very leveraged bets, which means you put a small amount down, but you can lose or forfeit, everything very quickly. So I put these positions on February 19th, and you can see they expired 1 week later. So everything that I was betting here, the whole, poker pot that I was putting in the middle, I would have forfeited if it, even if the market fall, but if it didn't go through this 320 strike price. Now, at the time that I was putting these on, the QQQs, which again is an ETF based on the NASDAQ, was trading around 334, which means that I had to have a giant move, about a 14% move, in order to make these things work. But by virtue of the bearish kind of everything that kind of came together there, I kind of thought I had a decent shot. But over the weekend, I kind of kind of woke up to what I did, and I just started freaking out and going, I'm going to lose 100 grand next week. It's it's a chunk of change. So you can see that I paid, I started out with 50, and then I got more aggressive. I bought another 100, then I bought another 200. Now, again, these are based on 100 shares. So you have to multiply 200 times $1. So I was paying an average of $1 for these things, and then multiply that by 100. So that bet was worth about 20 grand. That was worth another 10 grand. And that was worth about another 5 grand. So all told, this bet was worth $35,000. Now, the thing is, I did the exact same thing on another account. So I put about 70, 80 grand, into the pot. And if it didn't work out, I was going to forfeit every dollar. But 2 days later, literally 2 days later, the market dropped so precipitously that the put options that I was paying $1 for went to 10. And by the time I got out at 585, 575, 631, and some at 810. So remember, I paid $1 for these, and I made 800% on that particular series. So my 35 grand went to $195,800, or a 600% gain in 2 days. This was literally the following Tuesday. And the thing was, I rolled up my sleeves and did the same thing in the week following. But here's the thing. I did this on exactly this kind of format, where I did a 4-day live webinar series. And just like I am today, I showed everybody live exactly what I was doing. And I came into that, Monday losing 24 grand. And then the following day, I was up 142,000, and I had 450 of these puts making 58 grand. And then I was making 348,000 the next day. But you can see that this was reduced to 150. So I already took profit. So I made about 500 grand all told in that week too. So that was a couple of months ago. And I did the same thing in gold, where I noticed this ascending, broadening price pattern. I was telling everyone, despite the fact that there was so much hullabaloo and hype that gold was going to $3,000 right in the middle of this ascending, broadening price pattern, I said my target objective for gold is $1,700. And this was in early January, January 10th, right there. I was telling our members to sell gold at 1867. Based on my same analysis, I said add to the position at 1797. And that was on February 21st. And then blew the whole thing out for about 600 grand. Here was my position at 1841, 1795. I got out at 1687. And so that is basically, what I do and, how I do it. Now, I don't win. I mean, I don't win at every trade, but as you can see, I'm looking for big gains in the markets. So, despite the fact that I lose all the time, my gains far outstrip my losses. And that's really what it's all about. To me, it's the quality of your wins versus the quantity of your losses. So this is, I can give, I can have 5 out of 6 bad trades, but you can see the size of my, gains are enormous. And then, I'll just wave off losses like I did yesterday. I came in with a 65 grand loss yesterday. So I was losing 65 grand, and you can see that I was actually up 50,000. So that was a swing of about $120,000. And this doesn't include all of the options trading that I was doing intraday here. And I made about another 50 grand. So you can see I lost 16 grand in these CRM call options, and I just got out of them. I took a $16,000 loss and moved on. But you can see, I had a $64,000 gain to offset that. So this is what I'm looking to do over and over again. It's not like you're not going to have losses along the way. So let me kind of get to the real-time charts and, show you what, I was looking at yesterday when we were talking about Uber. So let me just move this over here. Where's Uber? Let me just put it in here. So this is a very difficult market environment. So sometimes it's also about recognizing the environment you're in. So, I showed you yesterday where I was positioned for a lift at $44, and it was during a market environment that was going higher and higher. And I just sat in that trade for about 6 weeks while, it went from $45 to $65. This is kind of more of a bump and run, a hit and run type of market where I'm just kind of looking for, a move from one level to the other. And then, I'm going to kind of look to reposition myself. So I made 300% on this small little move from one day to the other. And I got out, and now I'm just going to look for other opportunities. So you got to recognize the environment you're in. But so I kind of talked about this, reverse triangle with lift yesterday. This is not exactly a classic reversal thing. And I saw where we kind of snuck under here, and this was potentially a bit of a bear trap. And so I just thought this was a coil to unleash prices higher. How high? I didn't know. But what I did was I took a leverage bet. Instead of buying the stock, I just bought the call options and just positioned myself for a move from one level to the other. And so whenever I think that there's a turn in the market, you can see that we made a new low, then we had this inside bar. And then yesterday I was talking about this concept of this coil, where you have this inside bar. So I kind of anticipated that we would uncoil to the upside, at least get back somewhere into this white space. I didn't know how high, but, so while this thing was kind of selling off yesterday, I was anticipating that, we would, go higher. So this isn't probably the best, example to talk to you guys about, because there isn't, a perfect uptrend. There isn't a perfect pattern that preceded this. I mean, you kind of have a small little inverted head and shoulders here. But a lot of it was just kind of instinct. I've been trading lift and, and making a lot of money on the upside, and the trend is up. And again, this is not the best way to explain this to you guys, but sometimes where you see these risk reward relationships, where you see these narrow range bars, these inside bar. And when I mean inside, you can see that the range of yesterday's bar is inside the range of the previous bar. So when I look at those inside bars, then I try and anticipate the prior price action to anticipate where it's going to go. Now, I was just, again, looking for a small bet. I was buying some of these call options for 27 cents while it was selling off yesterday, and looking to blow them out as they went higher. And today you can see that it opened right here. It opened around $49. It went to, a little over $50. I had the $49 call options, and I blew them out at $1.70 right there. And so a lot of that just kind of instinct and what have you. Maybe it's, more luck than anything else. So not a great example to, share with you, how I kind of look at setups that precede big moves. But, we're in an environment now that, is very haphazard. So today I started shorting the Dow Jones early in the day, because I noticed that it started stalling out, even though the NASDAQ was doing well. Okay, so this isn't really a great chart to show you I'm just going to move over my kind of brokerage platform here. Because sometimes, I see the bars stack up in different ways, and it makes a difference to my eye. So while this may not be as robust a chart to visualize, I'll try and. So this is the Dow Jones. Let me see how much time I've got on here. No, let me take it back. This is the Dow Jones Industrials. Okay. And again, this is kind of early. I kind of try and picture these patterns as they're happening. This was a little bit speculative. Usually, like I tell you guys to wait till the end of the day to see how something closes relative to the high and low. But today I kind of started to see that the Dow Jones was already starting to stall out at a certain area. And I started buying puts very aggressively. So this is the Dow Jones Industrials. It's been in this profound uptrend. And recently it looks like it's in this reverse triangle. It's much like we saw in Uber. And then you can see that a couple days ago we made a high there. Yesterday we stalled out, and then today we stalled out too. So all during the early morning, I could see that we weren't able to, get above the last couple of days. So whenever a market's stalling out, certainly when you've had a market that's as robust as this, when they start stalling, they can turn very quickly. So again, probably not a great example, but certainly, after today, now I'm getting a clearer picture. And I can start visualizing a pattern where I have this descending wedge, but I also have this funky double top. Now, it doesn't look like it or you don't have to have the tops in the same area. So this is an asymmetric top where one top is lower than the other. But frankly, if we kind of look at this, down here, I'm not going to quibble that one is lower than the other. This is going to look to me like an M top. And so I'm starting to see these patterns starting to emerge along with this bearish price action. And, I'm kind of giving you a heads up for tomorrow. I'm going to tell you exactly what I'm doing tomorrow. I bought put options early today, and I'm going to add to my position. And so I kind of anticipate that certainly we're going to come down to the lower end of this thing. We may even have a false breakout and then go to a new high, but I think we're at least going to come out of this thing. And this thing is starting to look vulnerable to some downside action. We have a long-term price thing coming in right around here. So that's where the support is. So I think that there's, a very good chance that we come down, 2,000 points in the Dow Jones to the support level. And this is, what I like to do is it's like a horse in the gate. I like to get a market right as the horse is coming out of the barn. So if it turns from one direction to the other and I can get in early, I make just tons of money on the turn. So now this isn't really a key reversal. It is an inside bar. It's not a classic signal, but to my mind, I'm starting to see a shape and a vulnerability where we start to stall here within this, reverse triangle. And, this thing is starting to look very vulnerable. And this was, I guess, more instinct than anything else. I started, buying these puts very early this morning. And you can see by the end, it just collapsed really at the last 10 minutes of the day. When I show you the NASDAQ, the picture will emerge, a lot clearer as to why I think that there's a good move to the downside. And so let me kind of move to the NASDAQ and show you what I'm looking at there. So again, the proxy for the NASDAQ is the ETF called the QQQ, the triple Qs as they call it. This is an ETF. If you want to buy the NASDAQ, it has, Microsoft and Google and all the names in there. So if you want to, take advantage of the NASDAQ move you want to buy it. In this case, when I think it's coming down, I would either buy the inverse, which is the SQQQs, and I'll show you that in a minute, or I buy puts on the NASDAQ. Now, I'll peel out from this time frame, but I'll just stay with this time frame for now and just show you what I'm looking at in the immediate horizon here. So I already started getting a feeling that, we were going to start turning lower. I've been shorting all of these NASDAQ stocks for a long time. And the NASDAQ index is held up higher because, 20% of this index is made up by, Microsoft, Google, Apple, Amazon, Netflix. These are good companies within the NASDAQ. But even the good companies aren't going to be able to hold this thing when it turns. So you can see right here, this M top, this double top. And when we see, an M top or a double top, that means that market has topped. So now once I understand the pattern that is dictating, these moves, then I try and get in sync with the market. So if this is a reversal pattern, A reversal meaning a reversal of the trend that was going higher. Now, a reversal means that this market is likely going to go lower and could go much lower. When I peel out, I'm going to show you what I'm looking at long term. But just in the immediate time frame, you can see when we have, once I understand the pattern, even in this day, on this day, I shorted the market. So when we made a new high and closed on the low, that was a key reversal. That was on a Friday. I went home short that weekend. I was long puts. It opens Monday, and I made just a pot full of dough on just noticing that key reversal. Now, this today has exactly the same look. Where early in the day we went higher, and then we closed on the very low of the day. So now that's a reversal that points in the direction that this is. So we have both now the pattern, the trend, the reversal. And so this now tells you how to get in sync with the cadence and the anticipated, trajectory of this market. And this could be in anything. I would analyze the euro yen or corn or oil or anything the same way. So what I like to do is I'm already long these puts, but I'm actually looking to, get even a bigger position. And what I like to do is, what I'm hoping is that, in the morning it opens higher. This is what I call the elastic band effect, where it's like pulling back on the elastic band, you build more and more energy, for it to fire in the direction that you want to go. And of course, if you're looking to buy puts and the market's going higher, your puts are, kind of going down in value. So you're able to get a better price. And then when it releases, then your puts gain, a lot of value. So basically, once I kind of understand, so you've got this kind of double top right here, and you've got this key reversal. So any kind of price action in tomorrow, I'm going to start adding to my long put options. Puts meaning that I'm going to bet on the decline. So it's a little bit tricky in here because you've got some price history to clear through here. So it's, going to, not be like, knife through butter. That's why, I'm hoping that we get some kind of pullback, here. And then, I will. So the way I use these reversals is that, to me, very unlikely tomorrow we're going to take out today's high. So now going into tomorrow, I kind of already understand where my risk is because all of the traders today have informed me where my risk is. So, if this starts going higher tomorrow, I'll just start arbitrarily start legging into bets here, start shorting here if it goes a little bit higher, knowing that this is, my stop out. If it goes, there or a little bit higher, then, probably want to be out of this thing. So, these kind of days tell me how to get in sync with the move and also what my risk is. So that to me is the holy grail of trading. If you know where to get into a trade and where your risk is, even if you're wrong, over time, you're going to make a lot of dough. So it was right in, well, let me peel this out and I'll kind of explain what I did a couple of weeks ago, just to put this in perspective. Okay. Let me just kind of peel it, just see if we can get a little closer. Okay, that's better. So this is the daily chart of the triple Qs. Each one of these price bars represents one daily bar. Now, unlike the spot market, this has a close and an open price. So that's why you kind of see these gaps right here. So it gaps from one level to the other, from one opening to the other. And that was also an indication of what was going to come. So this was a couple months ago on my Master Pattern Trader program. I started analyzing this thing, and really, what I was looking at was this bear price pattern called an ascending broadening price pattern. An ascending broadening price pattern is that it goes higher throughout the pattern. It starts out life narrow, and then it widens or broadens out at the top. And this typically gives you a bearish move once it breaks out of there. So this is what I was anticipating all the way up here. So when I saw my first reversal, made a new high, close on the low, and then the second one, that was, I had the ascending broadening, I had the double top, and then I also had this island top by virtue of these gaps here. You had this little area effectively orphaned up here. It's called an island top. And then to throw into it, it also had a head and shoulders. So when I was looking at this thing, I go, there's 4 major bearish price patterns going on here. And then I also had my key reversals. Made a new high, closing the low, made a new high, closing. So you had the double top, the key reversal, the ascending broadening, the island top, and then the head and shoulders top. And, 4 price patterns coming, into, conflating all at one time. And so I just put 70 grand in the middle right here. I bought these things at $1, and you can see that when it went through here, these things, well, actually, what happened was in the following week, so I bought these put options right here when the QQQs are trading at 324. And then 2 days later, they went to 310, which means my dollar puts went to $10. And I got out between $6 and $8 on that move. And then you can see in the following week, it had a read load to retest that thing. I put on this option bet again, put on these puts at $1, and they went to 10 again. And so this was all by virtue of my anticipation based on this price action and these price patterns in this sequence. So now you can see this is the longer term chart of the NASDAQ. And so now you're kind of at this major resistance level. You've got this triple top up here. And this has been hugging this long-term trend line. I'll show you Tesla, a bunch of stocks have been hugging this trend line. Now, Tesla and a lot of these things have already broken this thing. And the reason being is that, again, the NASDAQ stock index is much stronger than the other stocks because they're held up by these quality names. But I can well anticipate that if we retest this trend line that has been holding this thing for a long time, that we're going to see a lot of air under here. So this could be previews of coming attractions of a big move lower. And right here you see the double top, the key reversal, and I'm anticipating that we're going to get a move something like that. So I'm starting to get my bets on, like Gretzky. I didn't skate to where the puck was this morning. I skate to where the puck is going to be. So how do I know it's going to be there? A lot of it is instinct. A lot of it, I can start drawing these patterns as the market is making. So, when the market is going up today, I'm looking at this obstruction the other day and saying, well, this is coming into a double top, obstruction area. And I'm already kind of drawing these scenarios in my brain. Now, I always say you need to wait till the close to see the final verdict. And this was the verdict. By closing on the absolute low of the day, it says, but, despite the fact that the market went higher, the sellers were in control by the end of the day. And so I look at this triple top, I look at this double top, I look at this key reversal, and I'm saying, let's take this for a spin. And I start loading up on these, pretty leveraged financial instruments, these put options, to take advantage of these moves. Now, you don't have to do that. There are, other ways to participate. The inverse of the QQQs are the SQQs. So if you want to, if you think that the NASDAQ is going to go lower, then you want to bet on the SQQs. And this is also a very leveraged instrument in that this is levered 3 times to the NASDAQ. So if the NASDAQ's down 2% in a day, this thing will go up 6%. So it's a really good way to take advantage of a decline that I think is upcoming. So this again is the SQQQ, and it's only trading at 12 bucks. So it doesn't take a lot of money to buy a couple. And so what I'm starting to see on the SQQQ, so it's the opposite of the NASDAQ. So since we saw that double top on the NASDAQ, it only stands that we have a double bottom on the SQQs. And you can see that we basically broke out of that neckline. And now you have this key reversal here pointing in the direction that this market is likely to go in. So if you want to bet on the decline, you don't have to put all your money in the middle like I do, like a maniac. You can get yourself a handful of these $12 ETFs, and that's one way to bet on it. But again, whether this is your bag trading the stocks or not, what I'm trying to do is show you my process, how I analyze trades. And it doesn't matter if this was a corn chart, a natural gas chart, a pork belly chart, the euro yen, or the SQQQs. It's just what I'm trying to do is give you an insight into my head and into my process on how I make real trades like you see that I make each day, where I carve out hundreds of thousands of dollars on these trades. And another inverse ETF that I just started to buy, down here. And again, I meant, visualizing that this is going to look like a double bottom here. So this is a volatility indicator on the S&P. And volatility is just a fancy word by saying, this has been going down because the S&P is going higher. And if the S&P starts going lower, this will start going higher. Now, this is also levered, I think 1.5 times the S&P. So whenever the S&P goes down, this is going to go, commensurately 1.5 times that. So, I'm starting to see this shape in here, and maybe I'm wrong. But, the great thing about, being here early is that if I'm wrong, this is basically my risk, and this could be my reward. So this is how I kind of get in these things early before the horse leaves the barn. And, so I got in today, but really what I say is wait to see how it closes. And we had a mini reversal here. We made a new low earlier in the day. You close on the high. And then I would simply, use this as a bar to confirm it and put a buy stop somewhere up here. So if tomorrow the market opens and goes lower, you're not filled. But, this thing is so low, it's $4.50 that, you don't have a whole lot of risk here. So I just, I'm going to load up the boat. And, you could get you can see how when these things uncork, you get like a 50% move in 3 days. So this is a UVXY. It's a volatility indicator. And again, it's an inverse play. It's a way, if you think the market is coming down, to take advantage of it. So this is the S&P. And again, I'm starting to see and visualize the S&P starting to come down. Let me just back out here so I could, let me try one more. Okay, that's good enough. So this is the S&P. We looked at the Dow, we looked at the NASDAQ. So this is the S&P. They all, have, but they're all basically have 5 big stocks in them that make up about 20% of the index. So it kind of masks what's really going on there. But just like the ascending broadening triangle I showed you in the QQQs, where I made 7 figures about 2 months ago, we're starting to shape out the same thing here. So again, these charts, these shapes appear everywhere. So you can see this is an ascending broadening price pattern, just like I showed you on the QQQs, where all throughout the pattern, it's ascending. It starts out life narrow, and then it widens or broadens out at the top. And the thing is, we know once this thing breaks where it's going to go. To me, there's no mystery. It's going to go right back to the bottom of the pattern. So this is basically what my objective would be. So I already know going into this trade where this thing's going to go. So here is the ascending broadening, and then here is that double top, just like I showed you on the QQQs just before I got in, and they broke hard. So this to me is starting to look like one of these. And, probably is going to look like a head and shoulders here. You have the other shoulder here. So I can already start drawing these. And this is what I do all day long. I start visualizing shapes. And then, I know I'm like pre-Alzheimer and somewhat delusional. If the market doesn't start going according to my shapes, then I will just respond to that. So, an equal and opposite reaction. Every action has an equal and opposite reaction. So if the market doesn't go in the way I think, then I just do the opposite. So whichever way I'm going to win. So I just kind of put a structure or boundary around prices, and then I defer and see how prices are going to go. And I already started to see this morning, while the NASDAQ was strong, you saw that the Dow and the S&P couldn't make any advance. So the NASDAQ made a small advance over the last 3 days highs, but you can see the S&P and the Dow Jones stalled. Couldn't make a new high in the last 3 days, and then we closed on the low of the last 3 days. And so to my mind, we're going to come down probably pretty quickly. I'll go over to one last chart, and then I'll kind of open it for a discussion if there are any questions. So the other chart I talked about yesterday was the British pound versus New Zealand dollar. And I already had a position in here, and I advised, our members in an email last night to add to their position. Now, again, I look for the market to confirm what I'm looking at. So I sent an email out to put a buy stop just above yesterday's high at 196.37. But you can see by virtue of today's action, we didn't get there. So the market didn't confirm so the stop order wasn't triggered, the pending order. So I just sent out another email tonight saying, just leave that in, keep it as it is, and guess what? If the market goes down, no harm, no foul. I'm not triggered. But can you see by putting a pending order, now I'm on this webinar now. I'm not watching prices. I'm going to have dinner. I'm going to go for a walk. I don't care. My buy stop is just sitting there. And if it gets triggered at 2 a.m. while I'm sleeping, I have my sell stop behind it. And, this would be my expectation. So the reason, and this is a great example of to my mind, a good risk reward setup, that is already somewhat mature, where you can see a couple things. So this is the W or double bottom price pattern that, to my mind, is the governing price pattern that will govern the trajectory going forward. And I don't know when it's going to go up, but to me, it's not a question of if, but when this is going to go higher, by virtue of that double bottom. And then I also see what we call a cup and a handle. Just looks like a teacup and handle. And you can see that it just shares this common resistance level. And if you want to be conservative and wait till it breaks through 198, that's going to be the moonshot. And I do think this is going to be a moonshot. This is the pound versus New Zealand dollar. It's, kind of an off the radar kind of pair. But you can see now that we have 4 days of a coil. This day, that day, yesterday, and today, all of these ranges from high to low sit within the range of this bar 5 days ago. So the more this thing coils, the more you're going to have an energy release. And I can anticipate that the energy release is going to be in the direction of the patterns and the trend. So when this breaks out of here, it's going to come out of here with a vengeance. And the way I, anticipated, I don't have to look at a 15-minute chart with some Bollinger Band or some magic, moving average type of thing. I simply put a confirmation above yesterday's high, 196.37. And, now I just let the market do its thing. It's going to go down, it's going to go up, it's going to go down. And then when it triggers me, it'll probably be an effortless trade where, I don't have to worry about being in a loss. The market will just take me, when it wants to go. So to me, trading should be effortless. The market should just put you in there. But I think what most people do, they pull up a chair during some 3-hour session, put up some 15-minute chart, and then stress over, trying to, take 6 pips here and 7 pips there and 15 pips there. and, wonder, why 3 months later, they're burned out and their account is just drained. And instead, in the last 2, 3 months, I've made multiple seven figures. So I think I'm going to kind of stop there and, just take questions. I want to kind of just see, if this is kind of resonating with you guys, if you think that this makes sense to you at all, or it's just a bunch of jambalaya that makes no sense. So, whatever, please, share, or feel free to share whatever you're feeling, because that tells me, if this is resonating or if I'm having a problem explaining. A lot of this stuff kind of goes up in my head, but it really comes down to, trend. So I open up a chart and I say, okay, well, what is this doing? This chart doing? Now, this is a more difficult chart because, if you don't know what you're looking at, to the uninitiated, and I could completely understand it, this looks like it's kind of everywhere and nowhere. It's kind of at the same place it started 6 months ago or 8 months ago. But to me, just like QuantumScape last week, this is just a pearl. This is everything that I look for in a trade. And it's getting mature where, after the pattern was set, after the table was set, we've just had this backing and filling and getting everybody shaken out. And by the time everybody's shaken out, then it'll go. And instead of me getting shaken out, I just stay in these things. I know what I'm looking at. So I just leave it and move on. So, instead of asking me to move on and look at other charts, I'd really like to understand your reaction to the analysis that I have. If you and ask me any questions regarding the analysis, and then, we can go and take a look at some other charts. So Napoleon says, it makes perfect sense using drawings, prove what you say, and that is great. So again, John says, perfect sense. I learned something on every webinar. Time will tell if I can implement with a small account, but your teachings are spot on. John says, of course, this makes massive sense. You have a brilliant insights and solid analysis. So, again, this is something that I have kind of put together in my own mind. It's taken me decades of making all of the mistakes. And that's not to say that I don't make, mistakes, but, that isn't the point. You're never going to have a process where you're not going to be losing trades. What I try and do is make my winning trades, dwarf the size of my losing trades. And that's really the point. So I think I showed you yesterday, if you're, dancing in and out for 15 pips or 10 pips or 7 pips, your objectives just simply aren't big enough. It's just, you aren't going to be able to survive by trying 5 times a day to make 10 pips and aggregate 50 pips. Instead, I don't get into a trade unless I can make 150 pips on one trade. So that means you'd have to have 10 of these trades. And so then I set it up that, I have this kind of calculus where I have a 3-to-1 risk reward instead of a 1-to-1. So instead of, risking 10 pips to make 10 pips, paying the broker 2 or 3 pips, this is how you mathematically, come out ahead. And so I won't put on a trade unless, and so then it really comes to visualizing. So people say, well, what's your take profit? What's your objective on this trade? And, it's not that I try and hedge. The answer is different based on where you're getting in a trade and then that particular trade. Now, this particular trade, my objective is, 1,000 pips on this trade. I think we go to 205 minimum. And we're 195. So there's 1,000 pips between here and there. So I'm not looking for 7 pips. And so I am happy to hang in something for weeks and whatever to make 1,000 pips over the course of a couple of months. So instead of trading in and out every day, I'm just sitting in a trade, and however long that trade's going to take, well, that's how long it's going to take. And then I will just, hang out with it. So D says, are you saying once this double bottom had set in this move, it will go out until it tops out? Yes. So to my mind, the market will end the way it starts. It has to end with some kind of resistance or pattern. So if it just started here, it's not likely that it's going to end there. Markets don't start and then end there, right? This is the beginning of a beautiful story. What was that thing at the end of that great movie with Claude Rains? So in order to understand that, what I do is I peel out and I look at the longer picture. And I think I shared this with you guys yesterday, that when you peel out and you look and understand the cards you're holding, then it kind of helps me stay the course. Whenever it gets difficult in here, I kind of have some context. I'm not trading it on some 15-minute chart where, look, in the next 15 minutes, you get a double top and it careens one way or another. And we have no, sorry, let me just straighten this up a little bit. This is the pound versus New Zealand dollar on a weekly chart. And so, frankly, this pattern 5 years ago tells me what to do right now. So by understanding that this thing bottomed 5 years ago, made a double bottom, came back, made a rounding bottom, and that was the bottom. So now that the bottom's in, over time, this thing is going to go higher. And I made, a fortune taking it from 165 to 218. It kind of camped back here, and now I think it's going to go even over those highs, probably long term. But certainly, once you understand the long term, so now in the short term, as we saw on the daily, we see the same thing on the weekly. We see a double bottom here, this rounding bottom. So it looks a lot like the same pattern structure back here is the same thing here. We have a double bottom, rounding bottom, and I expect this thing to have the same result. So now, if we end the week, and it's only the beginning of, the week, so we'll see how this goes. But if this was just an inside bar, I would simply just layer it by putting a buy stop above this inside to anticipate where this is going to go. So it's like Gretzky. I don't skate to where the puck is. I skate to where the puck is going to be. And that's where it's going to be. Yeah, Kevin, the beginning of a great friendship, it was Casablanca. That's, I was searching for that. A beginning of a beautiful relationship. That's, and this is a beginning of I think a big move higher. So you're going to start breaking out of here, pretty soon. And, I just think this thing goes higher. And if it doesn't, I get out, move on, and go find something else. And that's just, it's process, structure, pattern, make a ton of money, go and look for something else. So let's see, Joan says, is your program designed to help those of us who are not experienced? Yes, absolutely. So this is, for beginners, and, frankly, I think I could add a thing or two to, I'm always, open to learning, always open to learning. So, mine has been a kind of a learning process by experience, and I'm trying to just shortcut that for you guys. This is years and decades of making all the mistakes and seeing things and thinking of, I'm seeing things. And now I kind of understand how it all kind of comes together. And, that's why I started the Pattern Trader to, so Pedro, you're absolutely right. So Pedro says, I see a Head and Shoulders on the weekly, and am I wrong? So, this is the thing about, trading that I said yesterday. If you go and see consult a textbook, you'll see all kinds of patterns. And then you'll say, well, I saw that in the textbook, so I'm going to take it to the live markets. And then you don't understand why you're losing money. And that was the educational process that took me a long time, because I started in the textbooks, and then I saw a Head and Shoulders, just like Pedro is saying here. And then, I'm kind of getting short here and then wondering why I've lost all my money here. And so this is all about context. So yes, Pedro, you are right. This is a Head and Shoulders price pattern. Looks just like a man or woman's left shoulder. That's the head, and that's the right shoulder. And the neckline is somewhere underneath these lows. Actually, if you want to put it under the right shoulder, it would be under right there. So yes. So now, at this juncture, I'm seeing this head and shoulders. And now, as I said, the way you kind of understand where you need to be faced is that there's either a clearly delineated trend where, it's just pretty unambiguous where prices are going. And then in trends like that, you just want to get in sync with the trend. But, trends end, and when they end with a pattern. And so pattern precedes direction. And then the pattern tells us where the change of direction is going to be. But every once in a while, the market will throw us a curve and say, and I'll be looking at this and I'll go, is this still the governing price pattern? Or is this the governing price pattern? And at this juncture, I got to be honest with you. I still think and have thought that this thing indicates that this is bottom and this will find a way. So, this is why you need to have reference, why you need to have, this goes back to, 2016. So 5 years. You can't see this on a 4-hour chart. So, again, now you get into a tug of war where you say, is this the governing price pattern or is this the governing price pattern? And frankly, we can't really know. I had a feeling that this was still going to dictate, what's going on. But, ultimately, when I'm ambiguous, I just defer to the market and I see what the market does. And you can see very quickly after this broke this neckline. Now, if this was a head and shoulders, Pedro, this is a reversal, meaning that the market should go lower. So then we should have seen something like that. So if I see a pattern, then I need to see a price action that represents that pattern. But very quickly on, this, broke under here. So everyone who thought this was a head and shoulders chased the break of this neckline, and then it was back in your face. And this was what I call a bear trap. So it trapped all the bears. And frankly, I was on the lookout for this because to me, this was still the pattern. You had another double bottom price pattern here. And so these were the underlying bullish price patterns. And I said to my members, and there's probably a bunch of members, here, Mustafa and others, who will tell you that for the last 2 months, I've been obstinate as all get out. Every time this thing crashed, I go, you have to be long. And then this went to 198, went to 192. I go, I'm still long. I'm not giving up the ghost here, because to me, these were the patterns that are going to dictate it. So this is the nuance where the market will throw you all kinds of curves. It's like the magician, always trying to wave his right hand while he's pulling the rabbit out of the hat with the left hand. That's what the market does. It throws you all kinds of stuff to, get the weak hands out, and then it'll make its move once you've been flushed out. And so Buck says, thank you. This was my dilemma. So yes, we see, and right here, you saw this double top here, and I took these things. Once I saw the double top and the key reversals where made a new high, closing the low, I will take these trades. When I can make 600 pips going the other way, I will do it. But these are what I call counter trend. They're against what I think is the main trend. And so, my take profits and my objectives on these trades are very different than on this trade. And again, I know I'm throwing a lot of stuff at you guys. There's a lot of nuance here. You just have to trust that I know my stuff. So Matt said that was a brilliant explanation of something quite confusing. Well, it took me 4 decades to bring this to you guys in 10 minutes. And if you understand this, you wouldn't have wasted 4 decades like me. Because this is what I never could understand. I would see these head and shoulders, and then I would trade them and wonder why I'm always losing. And then I would get obstinate. I would say, okay, this thing's pulling back and now it's going to go. And then I'd load up even more and get short more. And then it would go really up my ass. And so, this is, an evolution of so what I've learned to do, instead of having a fixed paradigm where, yes, I see a shape. I definitely see this shape. But instead of saying this is definitive, I then defer to the market and see what it does. Now, if the market started doing this, then I got to respect that this is the new, sheriff in town. But I kind of always suspected that this was, the governing pattern, and everything else is a misdirect. Even when you saw this double top here, it was a misdirect to new highs. This is a head and shoulders. It's a misdirect to new highs. And so, it just took me a while to catch on to the game. And then once you understand the game, then I just sit through all this crap. I don't even put a stop loss. And I hate to say that. But if you can get in early enough, like I said, if I can get into a UVXY over here, then all this other stuff, you can sit through this noise. So I will get in a turn early. I saw the Dow Jones turning this morning. I'm in early. I've got those puts on now. So, even if it comes back a little bit in the morning, I'm still in profit. And then, if it releases later, I'm just going to add to my position. John says, okay. Thanks, John. I appreciate that.
Hey, Mark.
Yes.
Scott's asking, what strike did you use on the QQQ puts?
It depends on, so what are we, Tuesday? So I still have till Friday, right? Which is just 3 trading days. So, I usually trade the near term because, when you go further out, it's more expensive. And if I think there's going to be a big move, so it really depends. It's kind of so we're trading you can see we're trading about 70 or almost 100 lower in the aftermarket. It closed at 322. It's trading at 321.40. So, my put options are working right now, but I actually hope that it goes higher. I want it to go higher tomorrow so I can sell into that or buy puts. So if it's trading at 322s, then I go, okay, well, how much do I think that this thing is going to slingshot out of here? And I think it's going to come out of here quite a bit. I'm trying to find a way. I don't understand why I can't minimize this. Okay, there we go. So if we're trading, so it all comes down to now kind of a vision of, how far, how fast, what's the time. I think this is, going to smoke. The problem is you have a little bit of obstruction. You have some history here. So then it just starts, I started buying the 322 puts, today, and then it, went in my favor, and then I wanted to add, so I bought the 321. So, the further out you're paying less. So I have the 321s now, but, I'll ladder as it moves in my favor. I'll start adding. So I come and then it's just kind of a feeling. I say, well, first off, I'm looking to make 3 to 5 times my money. And so if the QQQs are trading at 322, so here's the 320s. So the 320 puts are trading at 87 cents right now. That means it has to go to 319, 20 for you to break even. And it's about 300, handles from here. And you say, well, okay, is that reasonable? And, I think it is. So what I will do is, so you could look at it's pretty arbitrary. Whatever you put in the middle, you're going to risk. So the further out you go, so if you go to the 318s, it's 50 cents, and it's based on 100 shares. So that's $50 for an option at the 318s. So if I think this is going to fall a lot, that's not even the 316s or 27 cents. And so sometimes, if the market has a huge move, if 27 cents goes to 60 cents or 70 cents, that's a 3 to 1 on your money. So it really depends on how robust a move. Now, this doesn't seem right. This doesn't seem right. Let me just make sure this is the 19th. I knew it wasn't right. So here's the 21st. I'm sorry. So that's Friday. I thought it was too cheap. So let me go back. So the 322s are trading at 275, which means you've got to pay times 100. That's $275 per option. So, and you've got to minus this strike to then figure out your break even. So you got to say that this is going to, close at 219, 319.25 by Friday for me to break even. Is that reasonable? I think it is. I mean, if this thing goes down, it could go down 6 in a day, which means it can go from 322 to 316 tomorrow. So I will, depending on how aggressive a move I see, I'll you know, it's like, usually I don't like to pay more than $1.50 or something. So I might go, let's say, to 318s, pay 148. And again, what I'm hoping in the morning is to get some kind of rally where instead of paying 148, maybe I can pay 125 for these, or 110, and get these cheaper. But right now they're actually going more expensive because the market is actually declining. So this is actually going to be more expensive tomorrow. So it really, it's a feel game. I'm not an options genius. What I do is I look at the underlying, and then I try and project what the underlying is, the triple Qs, right? Whatever the instrument, I'm like, yesterday was Uber. I'm trying to project what kind of move this is going to look like and the thing about options is you have to be right, and you have to be right now. So when I was loading up on those QQQs at the 320, I had to have a huge market move that week or I was going to lose all my money. If the big move happened in the week following, I would have been right, but I would have lost all my money. So with the options game, you're going to forfeit everything you put into the middle. You've got to be able to risk 100% of your bet. So if you want to buy this for 150 bucks, just consider that that's gone. So then what I say to myself is, look, I want to make 3-to-1 on my money. So if I'm betting $1.50, then I have to see my way to this being $4.50. And in order for this to be $4.50, this has to go to 313.5 by Friday. Can I see this thing falling 313.5 by Friday? And I can. I think this is ready to come out of here big. And when it comes out, it's going to come hard. It could go down. It could come down 10 points tomorrow, go from 322 to 312. So, I think you're going to have a big move. And, what I was hoping that you were going to get kind of a higher move into yesterday. I don't want to just see this thing open lower. So I wouldn't just buy this thing on the opening. I'd wait for some rally, some pullback that you get the energy. So it's just a feel thing. It's kind of hard to say. Roy says, how much will it plunge in your opinion? A lot. All right, Stefan, no problem. So Dwight, any other questions that are coming across that anybody holding up their hands?
Yeah. So how do you know when for certain? Sorry. How do you know when not to put in a stop loss?
Yeah, I don't want to get you guys in bad habits. Okay, so that's my own. It's when I feel like I have a pattern underneath me or something underneath me that I can kind of get a feel for, the risk. So with pound New Zealand, it's been, this has been really difficult. If you are just looking at day to day. So I was saying this is a buy, on my last webinar a month ago, in exactly a 4-day webinar like this, wherever we were like right here. We were somewhere in here. And I was saying this is a great buy right in here. But I also said, and I said this yesterday, because the way this thing came down, I don't expect it to go straight up. That there has to be what I call a build out. You have to build a way in order to go in the other direction. And so this price action doesn't surprise me. So once I kind of understand that I have this in my rear view mirror and then these guys. So, to my mind, why I look at bar charts instead of candle star charts is that once I understand there's a pattern, then there's certain price action. So these key reversals, these large range days where it made a new low, close at the high, made a new low, close at the high. These to me are actually pointing where they want to go. And so, once I kind of see, these are my soldiers. This is like my defense. Even though it was crashing here, everyone was saying, is this a sale? Is this a short? Is this a double top? And, I was saying, look, this is a difficult trade, but I don't see this coming through that. I didn't see it getting under 190. So despite the fact that I sat through here, I actually added up here, and then it came careening down. I kind of just held it. And a lot of people on this webinar, Mustafa, and there's probably many others who will tell you that, when I was telling everybody on the webinar right here, this thing's a buy, this has been very difficult. If you watch this on a 15-minute chart, this is, a stomach churner. And so, to me, this is what is my cheat sheet, and it keeps me on the straight and narrow. And there's no way to put a stop loss in something like this. This came from 192 down to 188. So these are 400 pip, little ranges here. So if you've got a 30 pip stop loss or 50 pip or 100, you're going to get taken out. So that's kind of the difficulty. So what I would say is I buy put a really small position and then add as things start, looking like it's, so I will add to a position. Let me see if I can find it. I did these trades a long time ago, but let me see if I can find it. I found it. So when I tell you I sit in trades for months, and I sat in this pound New Zealand trade for about 13 months once. And I made 7 figures. I got it. I mean, here's all the trades I did. And then sometimes instead of getting out of a trade, what I'll do is I'll hedge it. So, if it gets to, like it got to 196, 198 a few weeks ago, instead of getting out, I will actually sell the opposite. Now, you can't do this in the United States, because of some crazy, stupid rule. So the way you would do that is actually open up 2 accounts, have your main account where you're long, and then another account if you want to hedge and sell the other side. So I, was buying this thing at 189. I got out 192, and you can see I had no stop loss in this area here. I bought them at 193, 192, got out at 195. Got in at 189, got out at, so just, and made, 7 figures during that time frame. So that's what I will do instead of just, instead of getting out at this 198, I might just sell some against my long positions, make money on the downside, get out of the shorts, and then you make, so you make, so much more doing that. But, I don't want to kind of get in the weeds in that. Some trades are very difficult, like this pound New Zealand. QuantumScape, when I got in, I saw it and it was ready to go. And this one I think is too. So the more mature, the more, head fakes, the more kind of back and forth something does, once it gets to a certain thing, then it's good to go. But while you're living through it, day after day, if you're looking at this on a 15-minute chart, you're going berserk. So it takes, a certain mindset. But again, it's you just have to have a certain imagination, I think. Once you kind of understand or have the vision, then for me, I don't look at these charts. I've been in dollar Canadian for 3 weeks. I don't think I've looked at my, my positions more than a half a dozen times. I never look at them. I just trust in the pattern, and I've been short dollar Canadian. Right now they're, heading toward a bit of a support area. But, this is not really kind of getting me scared that I should get out of my positions down here. So it's just understanding the pattern, the trend, getting in, and, easier said than done, obviously. But, that's what I do in the elite program. I send out emails and guide our members to, what they should be doing. So this was, I guess, yesterday's email. This is what you get, in the master pattern trader. So I said, put buy stop in pound New Zealand. So it wasn't triggered. And I point out the double bottom, I point out the cup and handle, the rationale of why I'm looking at it, the inside day bar coil, where to put your buy stop. I explain it, all here, all the patterns I'm looking at. And then also what I was looking at yesterday in Uber, at $48, and today it went to, I don't know, 51, and I made, 60 grand in about 4 minutes. And I said right there that I'm long the $49 call options. So that's what the elite emails look like. So Napoleon says, a big question. My question is, if I put a call option, no, you either buy a put or you buy a call. They're two different things. A call is a bet on the upside, Napoleon, and a put is a bet on something that's going to go down. And it goes my side different. Do I have to? No, you don't have to cover and buy the shares. It's just you buy and sell the instrument, just like anything else. So if you bought a put here at whatever 148, and it goes to 250, you get out of 250 and you make almost 100% on your trade. And you can see there's 11,000 contracts here, so there's more than enough volume for you to get in and out of these trades very easily. So you get in and out, and you can see they've got a bit of a spread, 146 to 148. It's just like a Forex thing. So, you're paying a price here, plus your broker may charge you a fee. But, again, I'm looking to make 50, 100, 500%, on option trades. I made, 600% on some of my Uber trades yesterday. I bought them at 27 cents and I sold them for $1.70. So no, you don't have to do anything fancy and cover, and it's just, so these are the calls on the left side. So a call is a bet that the instrument's going up, and a put is an instrument bet that the instrument's going to go down. And so if this market goes down, these would go higher, these would go lower. And so you just buy and sell them like anything else, and they disappear in value in 4 seconds. In 4 seconds. So just a little move up will take these things up or down dramatically. So you have to be prepared to, take pretty large risks. So if you're, not really initiated, I wouldn't really recommend that. So Nick says, good question. So I would ask the same question. So Nick, all kudos to you. So Nick says, why do you teach? So if I just made 300 grand today, why would I bother doing this? I get actually a charge. So I've been, trading for, decades now. I watch my account go up and down every day. I've been doing it for decades. And obviously there's a certain gratification. I mean, I love the markets. Hopefully you can see that I have a passion. To me, it's just, trying to sort it out. They throw you looks, they throw you challenges. And I try and, kind of see what the market does and how it goes against my thinking. So I try and sort it out. And so for me to kind of give back, for me to try and help people, I wish, frankly, and this sounds self-serving and pretty arrogant, I wish I had found me 40 years ago, because I made so many mistakes. It's taken me so long to figure all of this out. And so I started the Pattern Trader as a way, to give back. I don't make, I haven't made any money out of this business in 3 months. I'll be quite honest with you. We spend so much money on marketing that, we're trying to figure out what model works and whatever. I don't make any money. I don't make much money out of the business. I make all my money out of trading. So the question is, why would I do this? And it's a very valid question. In fact, when my marketing partner, Peter, approached me in 2012, so I met Peter in 2010. He had a trading operation, and then we met each other, and we're both from South Africa, and we started talking. We had a lot in common. He was living in the UK. I was living in Los Angeles, and I saw his website. I called him up, and we had a 3-hour conversation. And he's a great guy, and we talked about trading and everything. And eventually, he was so dazzled by my trading, and he realized that he couldn't trade anywhere near the way I could. He turned over his whole trading business to me, and then he went and taught himself online marketing. And then about 2 years later, he goes, Mark, look, you have an obligation. You need to share your knowledge with people, with retail people. And I said, look, I have no interest in doing that. And I don't think it would be good for me because I take crazy risks in the market. I know what I'm looking at. I know what I'm doing. And sometimes, I mean, I was so pissed yesterday because I was long Tesla and I knew I shouldn't have been long. And I got bailed out today. Tesla went up about 18 bucks. I ended up making money and then shorting Tesla. But I knew yesterday I shouldn't. I got long on a whim and then, it dropped on me. And so I know I can deal with that. But when I've got thousands of people following me, that's a whole other jam. And so for 3 years, I told Peter, I just don't think it would work. I don't want the pressure. I don't want people calling me a scammer. I don't want people suing me, which inevitably happens. I don't get sued, but people call me a scammer all the time. They always say, you're not showing your real account. This is my real broker. This is not a demo platform. Everything you're seeing, is generated from this broker. So I didn't want that. And then finally, I started like attending some webinars, just to see what other people were doing. And, one webinar had like literally a chart with like 3,000 lines going through it. I have it saved somewhere. And literally my eyes were crossing, even if that guy had the best, widget in town. If I had to stare at that all day, I'd be blind. And I just figured, and then I saw the misrepresentations. And so I don't show track records. I don't show performance. I show you what I'm doing, but I'm also saying that, just because I do it, it doesn't mean you're going to. So Nick, that's a good thing. If I was sitting on the other side and somebody said that they're making all this money, then why would you be sitting and doing it? First off, I've been really injured and I have nothing else to do. I'm sitting in a chair with, a cast on my leg. And I really like this interaction. I like meeting people all over the world. I like being able to help. Some people have been with me for years and years. And my master pattern group, the same 100 people have been there for 5 years. And it's like, I didn't know, when I started this business, what it would be. But really what's happened is that I've kind of inherited a second family. I hear from people all over the world. I meet people come and visit me. I play tennis with some people, my client, members. And we've had retreats where people have come, we had a retreat in Fort Lauderdale where people came from Singapore and Belgium and Australia. And I was just knocked out that somebody would get on a plane and, spend 21 hours to come and meet me. So to me, I get real gratification about giving back, about sharing my ideas. And guess what? When I was on my master pattern trader and I was kind of going through the sequence, I thought in my mind, I was just seeing one pattern. And then, when I started going through it and started to see the double top, the island top, the head and shoulders, and this thing, just by talking it out and evolving my thinking in front of you, it starts solidifying things in my mind. So it's a very valid question. And that's my answer. You can accept it or not. This is what I do. If you don't like it, then that's fine. Just change the channel. And that's about it. John says, you're a diamond in the rough. I will follow no other. Thank you for your time and your teaching. So thanks, John, for those kind words.
Sonny said, what is your best advice for a new trader?
Knowledge, right? Risk is a function of knowledge, right? So I'm taking crazy risks, reckless things. I mean, I dumped 22 grand into, Uber yesterday. Right here. I dumped 22 grand that by Friday, this would have been, dust if, it hadn't worked out. And it looks crazy and reckless. And it is. I mean, I lost 16 grand right here. I took that loss. I just got out of it. I, preserved 10 grand that was left. I put 26,000 in the middle. I lost 16. So these look like, risky, bets. And a lot of them are. But to me, risk is a function of knowledge. It's taken me a while to acquire the knowledge where I can now make money effortlessly. It just actually blows my mind how, easy it is to make so much money. And it just sometimes every day I kind of like, I've been on a streak over the last 3 months where, it's just been effortless. And so to me, it's risk is a function of knowledge. So if I was going to perform, heart surgery on any one of you guys, I think that would be a pretty risky, endeavor for you. But if you went to the Houston hospital and got Michael DeBakey to do your heart transplant, it would be a lot less risky. So risk is a function of knowledge. So, just like anything else, anything you're going to do, whether it be a plumber or an architect or an accountant, this is a profession. And it blows my mind because, people will spend 5 years becoming an architect, 5 years going to law school, 10 years going to medical school. But everyone thinks they can just pull up a chair, open a chart, open up an account and start trading. And, they're not willing to do anything, to, spend money or time to build their knowledge. And that always blows my mind. So it's just obviously risk is a function of knowledge. When I see a chart like this, I've looked at so many charts, I can just in 2 minutes, this either says something or it doesn't. Like to most people, I can't imagine, if you're uninitiated, what, this would look like to most people. I would just see, something that looks like, pretty random, that this is the same place it was there. So, how do you, how would you, interpret that? But, when I saw this and this and this, and I made 7 figures right there, just in something that looks pretty random. So to me, again, risk is a function of knowledge. When I look at this chart, certain things immediately start standing out to me. I know what I'm going to do tomorrow. I know exactly what I'm going to do tomorrow. I know exactly what I'm looking at. I know what my risk is. And if things start going wrong, I'll understand that too. If prices all of a sudden start going like this, then I'll go, what, my whole, visualization is, is busted. And, then I'll rewire. But, I think I know what I'm looking at and I have a certain expectation. And, that's based on, how and what I do. So risk is a function of knowledge. So that's the thing. And then you have to have discipline and, you have to have patience and you have to understand money management. And so I said I would do this yesterday. So let me quickly do this. And then I'll kind of offer you a book that I've written and it should answer a lot of your questions. So I'm just going to throw this over here. I'm going to put the link in the, where's the chat box here? So here's the link. This is a position size calculator, which means exactly what it says. It's going to have you have the right size position for the right level of risk. And this is where it all begins and ends for most people. Most people are risking too much on each bet. And so, a short sequence of bets, has them down 10, 20, 30%. If you're down 30%, you need a 60% move to, break even again. And so people get in a hole by risking too much. And then they're taking, too small a stop loss. So I just showed you the pound New Zealand. If you're trading the pound New Zealand dollar with a 15 pip stop loss, you've lost before you've even begun. So I put like a 200 pip, risk on that. And people say, well, how can you risk 200 pips? Let me kind of go to my email yesterday. I don't even remember what that was. Yeah, it's 200 pips. So I put a buy stop at 196.27 and a stop at 194.27. People say, well, I can't take a 200 pip risk. So let's look at that trade on the pound New Zealand dollar and right size it so that you can trade it that way. So this is a position size calculator, and you can use this for basically any major currency wherever you are in the world. So I'm going to assume a US dollar account, and we can assume a small size account, $2,000 or whatever you want. And this is where you put your risk ratio. Say you should take a 0.5% risk per trade. So if you have 10 bad trades at a 0.5% risk, you've lost 5% of your money. and you still live to fight another day. But most people, you know, if they bet 10, have 10 losing trades and they're risking 3% each trade, now you've lost 30%. So you express half 0.5. And then your stop loss can be anything because you've denominated what your risk is, and then your position size is going to tell you based on your risk. So if you're trading on a 2,000 account size, so a contract size, this is a normal contract, which it's a standard account, 100,000. This is a mini contract, a 10,000. And then you might want to go to a micro contract, and you have to find a broker that does micro. But let's just assume, mini contract. And so this tells you that you can do 0.5 mini lots and take a 200, sorry, I put the wrong, I'm looking for the pound, there it is. So this is the pound versus New Zealand dollar. We have $2,000 in our account. We're going to risk a 0.5%, and we're going to take a 200 pip stop loss on that. So now this says your right size position for your given amount of risk, taking 200 pip stop loss, is 0.69. So guess what? The world comes to an end. Your stop loss gets triggered 200 pips lower, and you've lost $10 of your $2,000 account, or 0.5%. And you live to fight another day. Now you can, ratchet this up if you want to be a little bit more aggressive. Take a 1% bet. Obviously, your size goes up. You want to take a 1.5% bet. You can take certain, and there's your lot size. So that tells you exactly how big a bet you can take for your risk ratio. So even 1.5%, if you're, sure about a trade, that's fine. And then you add to your trade, and this is how you make money over time. So that's how you make money. It starts off with some knowledge and then money management. So you have this risk calculator, and in a moment, I'm going to share my book, which, gives you an insight to all the things that I've been talking about. I'll take maybe a question or two, Dwight, and then we can end it. Dwight?
Hey, Mark.
Yep.
Eric asks, could we maybe look at US oil as an example of a double top forming currently?
US oil?
Yeah.
Yeah. Where they've changed their chart on me, so I don't think it's a double top. Yes, it's at a resistance level, but I don't think it's at a double top. In fact, I think this is a double bottom down here. So I think this is going higher. So, here's the weekly chart. Let me just brighten this up a little bit. So yes, we are at, this resistance level, but to me, this does not look like a double top. And again, the whole discussion of why something looks like a double top and why it doesn't, is sometimes I can't even explain it. But to me, this is kind of a funky looking double bottom. You have a very asymmetric, we have one low much higher than the other, but it was like that double top we talked about. It still looks like this, W formation. And now this kind of looks like a rounding bottom. And yes, we are at a major resistance level around the $75 level. So I still think that the path of least resistance is higher. So I don't think this is a double top. It is at, a resistance level here, but, every resistance level is a little bit different. So I still think the path of least resistance still looks higher.
Ben asks, what platform do I need to be if I join you?
So you don't, so just so you understand, this is an education service. So this is what, I send you. And whether you take the trade or not, the whole idea is for you to get familiar over time with what market structure looks like. And so, I do Forex, I do stocks. And so I don't know where you are in the world. Just look for regulated brokers, reputable brokers that, are regulated, have good reviews, and somewhere where you can implement your trades. But I don't implement trades, just so you understand. I send out this information, and then what you do with this information is entirely up to you. We have some people who take the service who, are not even trading. They just want to get familiar with the markets, and they look at, the information. So this is a stock trade. This is an FX trade. You probably need two different platforms. There is a broker called Interactive Brokers that is pretty worldwide, that you can place, FX and stock trades on the same platform. But I don't really kind of give advice on brokers. That's entirely up to you. But just so we're clear, I send out information and I teach you how to trade. And then what you do with that information is entirely up to you.
Pedro asks, he first asks, could your door shot be a bear trap?
I didn't understand what you said, Dwight.
Or he said, could your door shot
The
be a
Dow?
bear trap? Yeah,
Dow-
your door shot. Could
Dow
it be a
Jones?
bear trap?
A bear trap, probably more like a bull trap. Um, so it's more like what I call a bull trap, if you want to call it one thing or another. So it traps anybody who chased the breakout. Let me just blow this up a little bit bigger. So sometimes a market will go to a certain level, make a new high or make a new low, and then it's, quickly turn, and it just traps anybody who chased that. And basically, that's what looks like it's happened here. So you can see that we broke out above these highs. And now, you have a chance of these guys being orphaned up here. So that to me is a bull trap where, bulls were chasing this, and now these bulls are trapped, if it goes the other way. So to me, that would be an example of a bull trap or a potential trap. All right, I'll take one more question, Dwight, and then I'll flash my book here, and then we can wrap it up. So if there's one more question, I'll leave it there.
Right. How to calculate lot size on stocks? Not sure if you answered that before.
Okay, so that calculator doesn't, but you basically, so let's take, for example, Uber. Uber yesterday was trading around 47 bucks. And so let's say, you think that, Uber's a buy, and you want to put your stop loss at $44. So now your risk is $3. And you have a $10,000 account, and let's say you want to risk 1%. So 10%, so you have a $10,000 account. You want to risk 1% on this trade. So 1% is what? 100 bucks? My math is terrible. So if your risk is about $3, then you would buy 30 shares or 33 shares. And that would be roughly equate to 1%. So if you got stopped out, you'd lose $3 on 33 shares or 100 bucks, which would represent, 1% of your $10,000, and you'd live to fight another day. Is that clear? So Mustafa says yesterday's video at the end was not the elite program. It was about your trading and making. Yeah. So, Mustafa, that's kind of just a different way we're integrating people into the elite program. So, but thanks for pointing that out. So Michael says for FX, you're saying don't trade intraday and hold for months, but in equities, you're saying, look, Michael, you're right. Typically I say, look at the patterns and wait for the close at the end of the day. And that's how, you should do it basically. I just started to see the turn, beginning of the day. I started to see the stall out, and I did, get in early. But frankly, you should wait for the end of the day. Sometimes I get in early and I'm wrong. You should just wait to see how something closes relative to the high and low. And so, a great example today is the QQQs, where if you wait until the end of the day, now you see pretty clearly, the reversal where you made a new high, you close on the low. So now tomorrow, you really understand where the risk and reward is by trying to anticipate it. Sometimes I do. And like I said, certain things that I'm doing, perhaps not consistent with what I'm saying to you, but by and large, if you follow the pattern and the reversal, and then you use these, then I'm looking to make the bigger money over time, right? So some of the things you saw in Uber, I got in, it made a push, I got out. But really what I'm saying in principle, to make the bigger move, and I'm seeing a big move here, I'm showing you how to get in and stay in. So yes, I am doing some of these intraday trades and whatnot. I'm just making these adjustments. So what happened was I was long Tesla, I was long Uber coming into today. And I was also long some CRM calls. And I quickly saw that the Dow and the S&P were stalling, whereas the NASDAQ went to a slight new high over yesterday. So you can see that yesterday was highs here in the NASDAQ, but the S&P and the Dow were not. You can see the S&P. So I was kind of watching those things stall out. And I was saying, you know what, I don't want to be long these things. So basically I came in, this was my menu coming into today. So you can see this was yesterday. I was long Tesla and I hated that position. You can see it was at 576. I ended up getting out at like 590 and making money on this trade, where I was losing 50 grand yesterday. I ended up making money, but that's a terrible example of a trade. I hated being long this trade. I was also long Uber. I was also long the market. And so I dumped everything pretty much like an hour after the close. So you could see Tesla, I was losing 48 grand yesterday. By the time I was making 5 grand, I said, thank you very much. And I bailed out of that thing. I actually shorted it. And then I was long these calls. I said, I made 60 grand. I go, thank you, I'll take that. I was long these calls. I was pretty twitchy. They were going to turn on me. So I just dumped out of all of this stuff like an hour into today. I just, had a big loss yesterday. I converted it into a big win today. I saw the market was very vulnerable and I dumped out of it. And so, now I'm looking forward, and now I'm looking based on today's action, what I'm going to do, today, tomorrow, and, going forward. So, I started anticipating it. I bought these Dow Jones calls at about 108. They closed at 192. I'm up about 50 grand, and we'll see how it goes tomorrow. But I advocate that you look at the pattern and wait till something closes at the end of the day. Yeah, I made some adjustments intraday today. I did.
Hey, Mark. So Margaret is asking if NASDAQ is a bear trap.
NASDAQ is a bear trap. God, you guys are really caught up in these traps. Yeah, it probably is. I mean, if you chase these new highs, these incremental new highs. So, I was shorting it right here. It went down and then it made an incremental new high. It just made, a small new high. But if you chase that, now you're stuck and steaming. Now you're trapped. So yeah, and it made, a double top here. So this neckline is probably right where, so these guys are trapped now. And, now they're going to be looking, they're hoping that the market is going to somehow bail them out. And I don't think so. Santa Claus is not coming to town this time. So yeah, I do think that this is it's a bull trap, not a bear trap, because the people who are chasing this are the bulls, right? And so all of these people who got long here are now trapped. So it's actually a bull trap. But, you know, really what I'm looking at are the patterns and the price action. So, you know, I can see this double top here. So this is what QuantumScape looked like when I was chasing this thing on the downside, where, you know, once the pattern was established, then I looked for, you know, secondary patterns, you know, right here, this double top here with this key reversal. And now what I'm praying for is some kind of, you know, knee jerk thing where it comes up tomorrow, and then I'm going to sell into that, buy puts into that. I'm already long the UVXY. I'm going to probably buy a ton of those UVXY. They're $4. And, you know, I can just load up on those for almost like no risk. And I hate to say there's no risk on something, but, you know, if I get in down here, you know, if it goes against me 20 cents, I can at least get a feeling if I'm on the right track. So I just feel like this has stopped going down. And when something stops going down, it can go the other way very quickly. So this is a kind of a counter indicator to the S&P. So it's at $4. I'm going to start, you know, just buying those for the fun of it. Mustafa says, is QuantumScape a good short? No, not really. You can see that QuantumScape, you know, I started getting out based on this little key reversal here and this one, and you can see that, you know, the momentum now is higher. So just shorting here would be arbitrary. I would just wait until the market tells me when it wants to stop. When it puts on a little formation like this, where you get these key reversals, these little, you know, in clusters, this double top. So no, I made a ton of money from, you know, all the way from 51 and 37 to 25. I got out at 26.20. I made probably 7 figures on this trade, and, you know, got out right down here when I saw this little reversal happening. So the market kind of tells you, it points where it wants to, you know, go, and then it points where, you know, it wants to stop. You know, the same thing with Zoom, you know, put in a whole bunch of this bottoming thing. I don't know how long these rallies will last. Probably not long, Mustafa. You know, I'd probably look to get, you know, on this gravy train at some point, but, you know, I'm just going to leave this alone for right now. Really, so tomorrow it's just really easy. Instead of trying to figure out which stocks I'm going to, you know, get in or whatever, you know, now just when I see an index kind of, you know, happening, then I can just, you know, put all of my focus in this index and just, you know, let that happen for me. So some stocks are going up, some are going down. I can't figure it all out. And so I'm just going to play this, probably this index tomorrow. There's some other stocks I'm looking at. I like, you know, the stock AYX. There's a bunch of stocks that I'm looking at. So you can see AYX has got this long, you know, downtrend. We have this key reversal. We've got to get through this obstruction here between 76 and 74. But, you know, I like this on the downside. So, you know, I look for plays all over the place. So I'm going to probably leave it there. Let me, so I'm going to bring across this book. This is the best way for you to understand my 4-step trading plan. I'm going to put the link in the chat box. And the great thing about this thing is it's a pay what you want. So sometimes I can't get the chat. Here it is. I'm going to put the link here. And so this is, you know, whatever you decide you know, want to pay for this knowledge, $5 or $100, I will take whatever you know, pay and double that. So whatever you want to pay for this, I double it. I personally double this and donate it to the American Childhood Cancer Organization. So this is my way of giving back. Every sale I make from every book, whatever we take in, I take that amount and double it every single month and send it to this organization. I sent over $25,000 last year. And so, basically whatever you pay, you're going to derive, knowledge, and I will take that and double that and give this to a great charity. So this is a great way to sign up, and, just tells you. So it's the Freedom Trader Playbook. So this really kind of tells you, everything that I explained: key reversals, inside bars, chart patterns. This will give you some context for, the conversations we've been having. And it's a great way for you to get started. So John says Mark's book is a must-have, plus it's a great donation. So John, thank you for that. Mustafa, you are too. Thanks very much. All right, guys, I think I'm going to love and leave you there. We'll meet again tomorrow, 4:30, see what happens, and happy trails. I wish you guys a healthy and prosperous trading day, and I'll see you back 4:30 tomorrow. Dwight, thanks for all your time, man.
Sure.
All right, I'm going to check out. Thank you.